As of October 17, 2024, both gold and silver markets are experiencing pivotal shifts driven by global uncertainty and evolving economic conditions. Gold has pulled back from its recent high of over $2,700 per ounce, now trading around $2,625. This correction follows a sharp rally fueled by geopolitical tensions, especially in the Middle East, and speculation around Federal Reserve policy. Gold remains a critical safe haven amid inflation and financial instability, though its short-term trajectory is volatile. Silver, meanwhile, is under pressure, currently struggling to stay above the $30 per ounce mark. A rising gold to silver ratio, which is now over 86, points to potential further downside for silver if it breaches this psychological level. Both metals are closely tied to US monetary policy shifts, with upcoming inflation data expected to play a significant role in near-term price movements. G'day folks, welcome back to another update for gold and silver. Before we go any further, make sure you hit that like and subscribe button and support the channel. So here we're looking at the trends. So on the monthly for gold, we've got a very bullish momentum. Pretty much almost the last year, it's been massive rise. Now, that's bullish. On the weekly, it's also showing showing a pretty strong bearish divergence compared to the price chart. So lower highs on the CCI versus higher highs on the price, giving us a bearish outlook. Now, we don't know if it's settled or reached its highs yet. It could actually go higher. It's been doing that for a while now. So until it starts pulling back, we're going to consider that a open sky, if you like, or blue sky. So just be aware of that on the weekly. On the daily, we did draw this resistance at 26.85. So again, it's had a double top there. We do also have a bearish divergence, a smaller bearish divergence on the CCI. So if I draw a trend line, you can see there, lower highs on the CCI versus that double top. I won't draw the trend line there, but you can see it's a double top there. We expect it to pull back. Now we did have a few bearish divergences back here. Each one of those hit its targets. And more recently, we've got another longer term bearish divergence there between that high and that high. Now, if we were to draw a Fibonacci retracement, assuming this pulls back from that level there, minimum retrace level, and I stress minimum, will be between that 23 and 38% level. That'll be the minimum retrace. Of course, it could go higher, and if it does, we're going to keep tracking it until it starts pulling back from that current resistance if it does break higher. But at the moment, it's showing a CCI decline, and we'll keep an eye on that. If that price starts declining, then we're going to expect it to reach this minimum level. Of course, it could go lower, in which case we'll track it from there as it starts falling. Now, if we go to the micro charts, using the daily as a reference, currently it's neutral. It was bearish during that period, in which case we would have taken short trades only, and that would have been short trades in that little period there. So if I put in the short arrows, a few little short trades there, some of those would have been break evens or small stop losses, but generally that would have been a declining market to trade. Now at the moment, the price has, as I said, on the hourly has been rising, and wait for this daily to either break to the upside or the downside to continue upward, or take long trades or short trades. But at the moment, avoid trading until we see the daily correct itself. Now silver has had a similar price movements. On the monthly, it's bullish. It has been going up that way since the start of the year. For the weekly, again, we do have another bearish divergence. System's a bit slow today. There you go, bearish divergence on the CCI versus slightly higher highs on the price. And again, if this starts retracing, we're going to see a minimum retrace between that high. Let's take it back. We could take it back to this level initially, but you can see there it's already probably hit that 23% level. So let's pull it back to that level there. And that'll be the minimum retrace. If it starts pulling back, we can expect it to reach that range there. That's on the weekly. The daily, we had a bearish divergence back here. You can see there it fell off, hit our minimum retrace level. That came down to about the 50% roughly level there. And at the moment, we have another bearish divergence currently playing out. You can see there higher highs on the price versus lower highs on the CCI. Now, to follow the strict rules of Fibonacci retracement. You can see there it's already fallen down to the 50% level. And if we take it even further, it's already also hit the 23-38% level. So that's already happened. But at the moment, the CCI is still falling off. And if that breaks higher and the price also starts moving higher, then we need to see it break this resistance at 32.51. Now if we go to the micro level again, using the daily as a reference, again, avoid taking long or short trades until we see the CCI break either below or higher than that moving average range. But at the moment, the CCI in the 1 hour time frame has broken to the downside and there's no sign of a pulling back to the upside yet. And again, if we look at that on those little support resistance lines, we've got this support at 31.30 and it's currently approaching that level. And the next level of support will be 30.57 if it breaks below that. Now, there is no divergence there to talk of. That CCI is moving in line with the price action there. The highs of new highs and new highs there. Likewise, the lows are still consistent. So at the moment, avoid taking trades until we see this break either above or below that moving average range, similar to the gold price. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page and links in the description below.